Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is February 9th, 2013. Lots to talk about, so let's get started. I'm just going to jump right into the charts here. I'm going to make this video as fast as possible. That's actually my goal right now. Please forgive me if I talk too fast, but I know you guys don't want to watch half-an-hour videos, and I'm going to try not to blab too long. I'm going to make a long story short. A lot of news out there is very bullish, okay? So be very wary about that. A lot of other technical analysis um, technicians, I guess you could call them, or traders out there are basically saying that the markets are overbought and it's due for a pullback. I tend to agree with both. Okay, so right now this is a bullish market. I mean, there's hands down, no doubt about it. The trend is up, not down. So until that changes, I mean, you would have to assume that the market's going to continue higher. However, I'm also in agreement that the market is overbought and overextended, and thus needs to pull back. And I don't think the pullback is going to be very big, but it's healthy for the markets to pull back if it can. Now, here's the thing. With the low volume, I've been saying this in all my videos. With low volume, it's hard for the markets to pull back simply because there's not enough sellers. Low volume is mostly the institutions trading the markets, and the institutions like the Feds want to just prop the markets higher simply because that's, you know, what gets the economy going. That's what gets everybody bullish. That's what gets the news bullish, and that's what gets people buying into the markets before they sell off. And they're trying to take the money from the small time people like us. However, hopefully we're smarter than that. Well, I should say hopefully I'm smarter than that, and sticking to my strategy, my very simple, very basic methodology, we wouldn't have gotten into the shorting trap, and we should not be in a long, you know, situation. You could be, but very, very short term, on very short term basis. Okay, so I'm going to take a step back to my most previous video, which was Monday's video, and I'm going to show you I'm not going to show you Monday's video, but I'm just going to go to the 10-minute chart to kind of show you guys exactly what I was looking at and why. Right now I'm actually sitting on the sidelines. I'm not actually in the markets right now. Okay, so let me switch to the 10-minute chart here. Alright, so this is the 10-minute chart of the SPY, which is the ETF that tracks the S&P 500, and this is the chart that we'll be looking at for the most part of this video. Here we have this candle that I talked about on Monday. This is Monday's just Monday's chart here. You see this dotted line here and this dotted line here. This is Monday's chart, and I said on it was a live chart too when I created that video. If we break down from this 149.51 level, then I see continued downside. If we do not, and they save it, meaning the Feds or the institutions save it above this 149.51 level, then there's an expectation that it could go higher, and that's exactly what it did. We gapped up the next day, we went higher, we consolidated, and then we moved higher again. Now, that is why I kept saying that this level, this 149.51 level, was a key level. If it could not have closed down below, then there is a possibility of it going higher. Now, in all honesty, I didn't think it was going to go this high, right? But I did think it was going to go higher because they were able to save it above this key level, which was the 149.51 level. Okay, that is why I released the Monday's video, because I didn't want everybody jumping in the short side. All right, I wanted everybody, or if it did close on the below the 149.51 level, then it would have been okay to jump on the short side. Was the reason why I released Monday's video. And like I told you guys, I'm gonna release videos during the weekday if there's important things that come up, such as important things like this. Okay, alright, just keep in mind that this is the 10-minute chart, so the 10-minute chart is more for short term. This is more for day trader type trading. Okay, so anyways, we pop higher, okay, and then we consolidate, right, and we pop higher again, and then we gap down the next day. All right, and then we just pretty much trade in a sideways pattern here before breaking down. Okay, and it wasn't really that much of a breakdown either. Okay, we create another reversal candle. Okay, this is a reversal candle on higher volume here. Okay, but it wasn't into really good support. Let me see if there was any support there. I didn't take this trade myself, but yeah, there was actually a pretty good support here. So if you were taking a day trade on this, then you probably would have taken this right here. That's if I was day trading, I would have taking the trade there, not at the bottom here, but right here, right at this this green line here. In any case, it went higher, and then the next day we gapped up again, and this was Friday's trading, and then we just started trading sideways here. Now on the 10-minute chart, this would be a long consolidation pattern for another move higher. However, okay, keep this in mind, we are overbought, we are overextended on the daily. Switching back to the daily chart, just remember, for the daily, for the hourly, for the 10-minute, etc., etc., the higher the time frame, the more reliable it'll be, except for if you're going into the monthly charts and stuff like that. The most I'll go is to the weekly, but it'll give you a better understanding of the human emotion that's going on. In the short term, however, the 10-minute chart is good for, like day traders and stuff like that. In any case, this was a fake, right? This was Monday's candle here, and it came all the way down into the 149.51 level. This was the one that we were just discussing. They saved it and they closed it right above it. Okay, so this faked everybody out. This got everybody short in the market right here. Everybody thought it was going to do this, but because they saved it above the 149.51, and mind you, this is a mathematically calculated level. You're not going to see anybody else out there on the internet saying or talking about the 149.51 level, and then boom, we move higher there. Okay, now switching to what I consider the most important chart is the US dollar futures. Okay, and I talked about this in not Monday's video, but I believe I talked about this in on last weekend's video. I don't know if I talked about this on Monday, but I did talk about this. All right, this candle here was a reversal candle, right? And I did tell you that reversal candle was on higher volume, and the volume was higher than the past 3 days. This down move was longer than 3 days, and this is actually a pivotable move, right? We also had this bottom trend line here indicating some support, so I expected a bounce, in which case should have had a opposite effect on the markets, and it did. I also said that we're gonna get some resistance right here, right at the 20 moving average, and we had the 50 moving average. We also had this upper trend line and this downtrend line here, which I drew in, and that's exactly what we got. We got a single candle here, a single pullback before the dollar pushed higher. Now the dollar pushed all the way up into this upper trend line here, right? Now again, the dollar is not, I just want to remind you guys that the dollar is not per price opposite effect. Okay, so basically if the dollar goes up, the markets will go down, but it's not going to be exactly if the dollar goes up a cent, then SPY will go down a cent. That's not how it works. Okay, just keep that in mind. But anytime they prop the markets higher, they need to devalue the dollar. Anytime they increase the dollar, then the markets has an adverse effect. However, let's look at the long term here. This is boom. You see the dollar? It just spiked all the way up, and the markets didn't really pull back at all. In fact, it was more bullish than it was bearish. Sometimes you're going to have that opposite effect in the dollar, but when you have that, that's a warning sign, in my opinion, that you better be ready. You better be careful, okay? Now, we went up into this upper trend line over here on the dollar from this trend line drawn. This trend line was drawn from all the way back here, okay? Of course, because of that, we create this reversal type candle here, which is a doji candle, but this doji candle didn't happen on higher volume, so it doesn't mean it's not going to reverse. Okay, it doesn't mean that, but what it does mean is that you have to be aware of it. It has to be respected, but I just wouldn't make a trade based off of it. Okay, there is a possibility that the dollar could break out from this upper trend line over here and then head straight to the $80.61 mathematically calculated level there. Okay, after that, if the dollar can break through the 200 moving average and if it can break through the double top here and the 200 moving average, that's going to be a pretty strong resistance point there. But if it's able to get there, then we're going to head for the 81.26. And if we do get to the 81.26, keep your eye on the 81.26. And the reason is because once we do, that'll be a pivotal point. And if it does turn out to be a pivotable point, then that will be an indication that a trend might change or start to change in the dollar. And right now the trend in the dollar is down, and as long as the trend in the dollar is down, then the market trend will be higher. Okay, so just keep that in mind, and that's exactly what's happening now. So what's going to happen next week? All right, let's take a look. Switching back to the daily chart and SPY, let me load my drawings. All right, so here's the deal. Next week Friday. Options will expire. And if you guys aren't familiar what options are, I suggest you read it. I don't suggest you play it unless you're going to day trade with them. But they give you the not the upper hand. What is that? They give you the leverage you need if you don't have enough capital to play actual stocks. I gave up playing options because you have a lot of Greeks that you have to worry about, like the deltas, the thetas, the vegas, and all that you have to be concerned about. But if you're interested, then you can definitely read up on it. You should at least understand the basics to options. And then you'll understand why next week is going to be a volatile week. Every third Friday of every month. So the first Friday was the first of this month. The second Friday was the 8th, and then the next Friday is the 15th, which is next week Friday. Now, anytime the week that Friday falls on, the markets get a little bit more volatile, and that's simply because for options, a lot of institutions are the one who are writing these contracts for us small time people to buy. And what they're trying to do is they're trying to whip us out of the markets. They're trying to get us to have our contracts expire. There's this thing called option or contract pinning. It's a theoretical thing that people try to guess where the institutions are going to try and pin the actual price to make that contract expire. And what that means is if majority of the people own this type of contract with a strike price of a certain price, the institutions are going to make the market close at that specific strike price. It could not only be the market, it could be Apple, the big time players like IBM and stuff like that. But when you look at the strike price, they'll close it right there, so your option is pretty much expires worthless, and they don't have to pay out anything. So just keep that in mind. So institutions and feds and whoever write these contracts will try to whip you in and out of the market. So you're going to see a lot of volatility, and that's the normal. I mean, it doesn't always happen, but I would say 80 to 90% of the time, you'll see a lot more volatility than normal, and a week. In the third week of every month, or I should say the third Friday, um, that week of every month will be a little bit more volatile than normal. So just keep that in mind that you may see a lot of whippiness next week. This week there was actually a lot of whippiness already, or this past week, because we had these whipping back and forth on the intraday. But let's just put aside the options expiration week, and let's look at this in more of a, let's just say it didn't have options expiring, okay? What do we see? Well, initially we see obviously this long extended move going up. Okay, we're doing that on very very low volume, so just keep in mind that that really doesn't mean anything in my opinion. This up move here, other than the fact that the volume is low, and they want people to think that the economy is great because we're making all-time highs, and that's another signal that you have to see from the news, that whenever they say things like that, you just got to be cautious. Okay, so I wouldn't go long or short. I just want to make that clear until we get that reversal signal, especially now. Okay, and I may miss the train waiting for a signal, but that's why I keep my trades very short. For example, that day that we hit here, right? I took a short, not here, but I took a short around here. Okay, I forget what the exact price was, maybe around here. On the intraday, I think I was looking at the hourly chart, and I took a short. And then I've had a break-even stop. I think I mentioned that in Monday, that I already had a break-even stop on Monday. And then the next day, I obviously stopped out for a small loss, so it wasn't really a big deal. It was a break-even stop. And in addition to that, in the previous video, I also said that I picked up a very small amount. But again, on the daily chart for a swing trade, there's no reversal patterns. I see absolutely nothing. There's higher volume here, which is good, but then this is not a reversal candle. And then I had higher volume here, which is good, but that's also not a reversal candle. And even on these volume spikes, it's only 162 million there, and this one was 159 million. So it's really really low volume, and there's nothing here indicating a possible reversal yet. So if you are long the market, great. But if you're not, actually, I should say, if you are long the market, then that's very good. But if uh, I would, put trail your stops, because there's definitely a possibility that we may, start seeing a pullback anytime soon. I do have a mathematically calculated level here at 154.10, but I'll get to that later. So right now we have this long move up here, which is telling me that there's no significant pullback. I mean, these little things here are not pullbacks to me. Okay, they're not considered pivot points in my opinion. This is just a straight move up here from this gap up. Okay, so just keep in mind that it would be healthier for the markets to actually pull back. All right, now looking at it in a bigger perspective, we also can draw a line straight like this, and then we're actually just trading into like this somewhat of a triangle that's eventually going to break down. Okay, so what you want to watch out for is this. This is not a very good trend line here, but just watch out for it. This trend line I drew from this pivot point here, and you can cut through tails, in my opinion. When you draw trend lines, you can cut through bodies, but this to me was a fake. Okay, so I could just cut through this whole thing here, and then we have another kind of a intraday pivot point there, and then we have this fake out here, and then we continue higher. If we break down from this bottom trend line here, then I think we have a possibility of retesting this 149.51 level once again, and that will also potentially break down from this 20 moving average. If we break down through this 20 moving average and this 149.51 on a close, and then we validate that with the next day with a lower low, then that's when I think it's going to turn over. Okay, so keep your eye on this level here, because it looks like we're just sneaking all the way up towards the 154.10 level. Now, if we get to the 154.10 level, I do believe that we should see, if we can get here now, if we can get here, I do believe that we could see a potential pullback. If we get all the way up into the 155.44 level, then I also see another potential of a pullback, and of course, ultimately the 157 flat level. And that's all I pretty much have up there. Okay, so just keep these levels in mind. Write these down: 154.10, 155, 155.44, and 157 flat. If the market does some weird stuff next week, because it is the week that options expire and I do expect weird things to happen, then I'll be able to recalculate these mathematical calculations, and these things may change based on next week's action. So just keep in mind that next week is going to be volatile. So if you do decide to take a trade, you might want to widen your stops, because they're going to purposely whip people out of the market, and they can see where your stops are if you have stops in place, automatic stops. My stops normally happen on based on closes, meaning where the candle closes, because a lot of institutions like to play that game. And we know about this manipulation in the market, so we just have to be aware of it, and accept the fact that it's going to be there. So what do I think is going to happen next week? Well, that's a really good question, to be honest. This market's just been going up, and I'm just looking for a pullback or an indication of a pullback. Now I'm going to do one or two things. When excuse me, when or if I do see a pullback, I'm gonna get ready. Like if I see a signal of a pullback, say a doji candle or shooting star type of candle on higher volume, then I'll probably take a short trade, but it'll be a short-term short trade. Okay, and the reason is the market is an uptrend, and all I'm looking for is a pullback, so it indicates a healthy market. What do I mean by healthy market? Well, every market, I mean, nothing just goes straight up. You gotta have pullbacks, right? Obviously, everybody knows that, and that's healthy for a market. Okay, I'm looking for that pullback, and I'm gonna trade that pullback if the indicators show me that a pullback is in effect. If I miss the train, like sometimes I do, because it doesn't give you the signal and it just pulls back based on national news or whatever, it's not going to bother me, because the trend is up. What I want to really catch is the uptrend, not the downtrend. Sorry, not the I really want to catch the uptrend and not the pullback, right? It's nice to catch the pullback because that's extra money in your pocket, but I also want to I want to see where the pullback happens, and then prepare myself to take a long trade on the market for when it continues higher. Keep in mind that the longer that this thing extends up, the bigger the pullback is going to be. So this 149.51 level is going to be a pretty important level in my opinion. If this guy still trades to the side like it is now, so you can pretty much just draw it like this if you wanted to get creative. I wouldn't really consider this. This would actually be a breakout candle here, but I really wouldn't consider that a breakout based on this volume here. It's just way low. In any case, to make a long story short, um, this 149.51 level is going to be a pretty big level if we get to the 154.10. If we get to the 154.10 and we drop, we have a pullback signal, say a doji candle up here with higher volume, and then we start pulling back into the 149.51. This at that time, just based on what I see now, is probably when I'll take a long trade on the SPY because the trend hasn't changed yet. Now, the longer we go, I mean, say we get into the 155.44, I wouldn't take a long trade at the 154.10. I'd probably wait for the 149.51 once again. But again, it depends, and we'll just have to see what the charts create. And next week, I think we'll see a lot more data, and then we can figure out a lot more things of what's to come after next week is done. Okay, so just keep that in mind. Just be careful. Next week is the week the options expire. All right, I just want to make sure it's the third Friday, and it is. Okay, so let's see. All right, I had a request to take a look and do an analysis on Apple from Favco. Um, all right, so Apple does look interesting here. Yes, I do agree. It does look interesting. Apple is right into the 20 moving average. We're right into the 476.39 mathematically calculated level. This mathematically calculated level did not hold up as well as I wanted it to because of this gap down here. And the reason why I did that is because of earnings. All right, so keep this in mind. The only reason why I left this 146.39 mathematically calculated level here was simply because it had no effect on the earnings day, but at the same time, it never does. There's no support and resistance level that I know that I can rely on anytime there's earnings. Okay, I mean that's just the bottom line. It's just tough. It doesn't mean it doesn't work. Sometimes I do see support and resistance levels work, but it's tough. Now what I do see here is this: Apple is still weak. I've been saying that for weeks already. Apple is still in a downtrend, and that has not changed. You have highs, higher, lower highs, and lower lows, etc., etc. Okay, is this a time that Apple could reverse? Yeah, anything's possible. Will we get a bounce and you know, it's just is this just a small bounce before we drop lower? That's also possible too. I mean, if you kind of think about it though, the markets have been really strong, right? And if you look at Apple, we only went up $6, right? I mean, we had this nice little pop over here, but it wasn't anything dramatic considering how much the market's been moving in a bullish manner. If the market's been moving so good and Apple is kind of lagging, then that kind of gives you a slight signal that, you know, there might be a possibility that Apple might still be weak. Um, Let me see if I can get a level here. Something significant would be good. Give me 1 second. Alright, I'm back. I tried to do another calculation here, but the data is just not there right now for me to get something solid. Well, let me take that back. Hang on. Alright, yeah, I'm back. The data is just it's not enough on Apple for me to get a solid number. In any case, just doing some old school analysis here, we're right into we are into the 476.39 level, which is pretty cool because we went right into it and then we pulled back. Um, See, the high of this candle was 178.81, so that's a $2 mark. Let me check the intraday here. Sorry guys, I'm just doing this live as I'm just doing this analysis as I make this video. Alright, so it's pretty interesting. We go right into the 476.39 level. Alright. And then we just consolidate here. This consolidation pattern kind of fails, kind of comes down. It's just Apple is just messy right now. We're just trading right around this 476.39 level. This is the 10-minute chart on Apple. Let me switch to the hourly chart, see if there's anything there. Yeah, and I see pretty much the same thing. We're just trading right on the 476.39 level for a potential bounce higher. So on the hourly, it looks like that we could go a little bit higher. Okay. Alright, so there is a possibility. Well, we got a gap fill here. Okay, so let's go back to the daily chart because that's what the chart that matters. Um, all right, so this is what I see. I wouldn't short Apple in my opinion, even though Apple's been weak, and the only reason why has been Apple has just been going down and down and down. Eventually, we're gonna need to see some sort of reversal on a company as big as this. We don't need to, but I just don't see enough for me to actually take a short trade. Okay, I mean, there's no, you know, good volume here. There is a reversal candle, but there's no good volume here. So I'd be breaking my own rules if I said that I would take a trade on this here. However, just doing old school stuff without the calculation or anything, we are into the 20 moving average. Okay, we are in a downtrend, which means that the trend is still down. The trend is your friend, so if you play that way, then that's fine, but the trend has been down for a while, so you just want to be careful about that. And we will be going right into a gap, not a gap, and this pivot point within the gap here. So you may have a little bit more upside before pulling back, and then you'll have gap fill now here, right around this area. Okay, and I think this area here would be a pretty good short if we can get there. That'll be coinciding right into this 50 moving average, and then you'll have a gap fill there, and then you also have this upper trend line here. So right around this area here, if it can get there, would be a nice spot in my opinion. But then we may actually get some sort of intraday, or maybe some sort of I'm pretty sure we'll get at least an intraday pullback over here, um, before moving higher, if that's even in the cards, or we might just start heading down from here. So that's what I see on Apple. I hope that helps. I know it wasn't any definitive type of information, but again, I want to give you the up and the downs of anything. Okay. Speaking of which, this is the daily chart back on SPY, and I also want to mention any type of downside. So if we do pull back, because next week is going to be, or should be, a volatile week, the 149.51, just keep your eye on that. If we do start pulling back next week and we break past the 20 moving average on the 149.51 level, so we close below the 149.51 level the next day, we validate it. Validation is very important, especially for a week like next week, because they're just going to try and whip people out. I think we can get to the 147.05 level. Okay, so just keep that in mind. All right, so geez, this video is already 27 minutes. So I keep saying I want to make the video shorter, but it just keeps ending up being about half an hour. In any case, thank you very much, Favco, for responding to the video. I'll be more than happy to do more analysis for you. Um, Thank you to everybody else for hitting that like button, in addition to Favco, of course. Thank you very much for taking the time out of your day to watch these videos. I hope these videos are helping you. I really do. They definitely keep me out of trouble. My methodology is very strict and stringent, but it does help, and I am making money, so I am happy. Obviously, making money does make me happy, but it does take discipline, and it does take a lot of money management with your break-even stops and your stops, and of course all these other things that you have to worry about. In any case, thank you very much. Thank you very much again for hitting the like button. Again, there's no charge for these videos. There's no website or anything like that. I'll continue to make these videos as long as you guys continue to watch them. And again, good luck to you next week. And if there's anything that crazy that goes on that's going to change my mind next week, then I'll definitely create a video for you guys, release it, and see what happens. And if anything, good luck to you guys. God bless, and I'll see you in the next video.